And I'll be your host today. Today we have Sam Harith here from the Comic Accountant, and we're going to be talking about home accounting software for small business owners. So we've done a number of sessions with Sam. He is so fantastic at delivering information because he was a university level educator in finance. And is still. So the way that the information is presented is not only logical and easy to follow, but also because of his love for illustration, he does have quite a unique style on delivery, which we appreciate here at Digital Boost because we like to keep it light. Today we're going to be talking about PocketSmith. Is that right, Sam?
Yep, exactly.
Mm-hmm. Yeah, cool. So I'm looking forward to it. I use that app myself. So not very well, I don't think, but so I'm really looking forward to learning a little bit more so that I can use it more efficiently because I've plugged it in, but now I'm like, okay, what do I do now? So yeah. And we've got some other bits and pieces possibly about doing mortgage stuff a little bit more simply. Isn't that right?
Yeah.
Mm-hmm.
Not gonna guarantee that you'll get finance approval, but I can show you how to make the process easier.
Well, I mean, I think that's important with small businesses. It's a little bit of a different game sometimes than employees.
It is a bit of a different game, yeah.
Yeah, so yeah. This is good insight. We appreciate you, Sam, stepping in today as well. So I will let you kick off so that you can get things going. I want to get the chats going because I know folks have been living out there. On the fringes in the social media realm.
All right, cool. Hey, so thanks for the introduction, Anamari, and the rest of us. What's up, team? Let's get straight into it. All right, so today we're going to talk about home accounting for business owners. And I think home accounting is already quite challenging, even for non-business owners, even if you're just a salaried employee, earning a regular income. I think even managing that money can be hard. Now, I think as a business owner, it gets a little bit more challenging even. Now, if you've watched some of my previous sessions on Digital Boost, or if you've been a follower of the Comic Accountant, you'll know that we've written and created a module called the Pay Yourself module, which talks about how you can pay yourself through drawings as a small business owner. All right. If you haven't watched it, definitely make some time to watch it. Check it out on our website. It's got some really, really good stuff there.
I'll drop the link in the chat, Sam.
Yeah, and a lot of what we're talking about today does kind of feed off what we spoke about in Pay Yourself. But today we're going to look at more of the nitty-gritty, more practical aspects of managing your personal finances as a small business owner. And bearing in mind that even if you are not a small business owner, you can still utilize the same strategies to manage your own personal finances. So let's start off with what we will learn today. So mainly what we're going to learn today is we're going to learn how to sort out your personal expenses, right? We're going to talk a little bit about the usage of accounting software. We're going to talk about how we budget, right? And then we're going to talk about how we then report on that, right? And I'm going to talk you through this. And we're going to emphasize on how each step will help you gain better financial confidence over your finances. All right, let's talk about accounting software. Now, I've spoken about accounting software before at great length in different topics. I am a huge believer in automating your finances. I'm a big believer in using digital tools to manage your finances. Gone are the days of receipts in shoe boxes. And gone are the days of trying to work out everything on a spreadsheet. These days, find yourself an accounting software that can work with bank feeds, right? And just get yourself set up. Like, honestly, the cash investment is well worth the time. So just get the computer to do it for you. So today we're going to specifically talk about PocketSmith. Now, I really like PocketSmith because I've used PocketSmith for the past 8 years now. It served me very well back when I was an employee, and it still continues to serve me very well now that I'm a business owner. I've also written for PocketSmith before, and I'm, I guess, a preferred PocketSmith advisor, if there is such a thing. And and full disclosure, I have gotten some kickbacks from PocketSmith in the form of a free subscription to PocketSmith, just because of some of the content and marketing work that I've done for them in the past, right? But that being said, I do say that PocketSmith is one of the better personal home accounting softwares out there. There are a few other home accounting softwares if you want to check it out. You've got software like YNAB. There's YNAB, and there's Mint as well. Although I'm not quite sure how far YNAB and Mint are supported in New Zealand. PocketSmith is 100% supported in New Zealand, mainly because it's a Wellington-based company. So if you're Kiwi and you feel like supporting local, definitely give PocketSmith a try. All right. So PocketSmith, as I pointed out earlier, is an NZ-based accounting software. It's very easy to set up, all right? And it works with bank feeds all around the world. And this was actually really, really interesting because I was talking to one of the marketing reps from PocketSmith, and they're actually Malaysian as well, just same like me. And she was telling me that, oh, look, yeah, sorry about that. My Spotify just suddenly turned on in the background. Yeah. And she was saying to me that, yeah, actually even works with bank feeds from Malaysia. So that's really interesting if you are looking at managing your investments in different countries as well. Right. So getting set up in PocketSmith, the first one is you want to set up your bank feeds, then set up your categories, and then you start accounting. Right. So I'll just quickly show you how that looks like. So if we go over here, okay, this is the PocketSmith dashboard. So when you get set up for the first time, the first thing that you want to do is that you want to go to manage, all right? And then you want to click on bank feeds. Okay, and then you want to click new connection. And then from here, you can type in your bank name, all right? Say, for example, you're setting up ASB, okay? And then it's a matter of authorizing. So you'll be logging into your online banking and then connecting the accounts. Different banks have different ways of doing it, but it all starts from this window here, all right? And so once you get the bank feed set up, then what happens is that it creates bank accounts on your dashboard. And as you can see here, I've got a few bank accounts set up for our personal expenses over there, right? And then once the bank feeds are up and running, the next thing that you want to do is that you want to go and check your categories, okay? You mainly want to make sure that you've got your income and expenses category set up. Now, PocketSmith usually has default categories set up by default, but you can always add new categories if, say, you have specific expenses that you want to categorize. For example, maybe shoe expense. Maybe you've got a dedicated shoe expense, for example. I don't know. I'm not a huge fan of shoes, but you might be, right? And so you can add a new category, okay? And you can even, and you don't have to pick a template, but you just type in a category title. You can put in shoes, for example, and you can add in new category. Yeah. Okay. And categories are categories that we can categorize transactions to. And I'll show you how to categorize transactions to categories shortly after this. Right. Now, when we head back, let's head back to the PowerPoint slides. Okay. Now, the first thing we want to do is we want to categorize your income. All right. So we want to make sure that we have categories set up for income categories. So the first one would be salary and wages. This could be relevant, say, if you're working your business only part-time, or you've got a partner who is on a PAYE salary. That's the situation that my family is in right now. Benefits received, if you're receiving benefits from the government, or you're receiving grants, or any working for family tax credits, for example. And of course, business drawings. And business drawings, if you will remember, these is based on what you've calculated from the pay yourself method. Right. So if you haven't seen that video or read that article, I highly recommend that you do so. And then you'll get a better idea of what sort of business drawings that you can take out of your business. Now, going back to the category screen, as you can see, I've got my income categories. My income categories are, hang on a minute. There's other income there, everyday expenses, credit card payments. Yep. So my income categories are set up as SH wages, and that's the wages that I get from the university. PT is my wife, and she draws a wage from the hospital. And I've also got SH business drawings. All right, and that is the category that represents my drawings that I take out from the business. Right, and so these are income categories that once we get the bank feeds coming through, we categorize them towards that account. And once we add all these income categories together, that is what's going to show up as income on our PocketSmith reports, right? So it's still the same basic accounting process. It's actually really, really similar to working out your taxes at the end of the year, except that you can't be using this software to work out your taxes, because again, your taxes as a business owner, your taxes are going to be paid from the business side of things. And if you're on a PAYE salary, your taxes are already taken care of for you. The main purpose of using home accounting software is for you to get a better idea of what you're spending on, and more importantly, how much money you can afford to put away in savings. So after working out your income, we want to work on categorizing our expenses. So the first 4 categories that we want to make sure that we have are groceries, motor vehicle expenses, eating out, and mortgage and rent. These are what I like to call the big 4 expenses, right? Because invariably, most families, these are your 4 biggest expenses right here. And 9 times out of 10, mortgage or rent is going to be your biggest chunk of expenses, right? In our household, we pay anywhere between $2,000 to $2,500 on rent. And I think it might be the same for other people's households as well. If you're paying your mortgage down, that could easily be $5,000 to $6,000, depending on how big of a mortgage you have, how fast you're trying to pay it down. And I think with the recent interest rate hikes, I think quite a lot of mortgage owners are really feeling the sting right now. So you definitely want to have these expense categories set up first. And once again, you can go and check out the categories page here, and you can see if they have been set up. They're usually set up by default, but you can also check. You can also, again, add in those new categories if you can't be bothered checking the categories that are already set up by default, okay? Once you've set up the big 4 expense categories, then you can start setting up all the other ancillary expenses. You can have stuff like daycare, education, insurance. As a business owner, you'll also want to set up an account called Funds Introduced into Business. And this is funds that you're paying out from your personal funds that you're putting back into the business. Say, for example, your business needs a cash flow injection, or maybe you've incurred huge losses over the past few months and you need to be able to maintain business operations. And so this is what Funds Introduced is. And from a personal point of view, it counts as an expense. It counts as a cash outflow for your family, because that's money that you are not entitled to as an individual. That money now belongs to your business. Okay. And what I like to tell my clients is that, I'm very, very strict about keeping that separation, keeping that delineation between personal expense and business expense. Apart from these expenses, feel free to create some luxury expenses as well, some luxury categories for traveling, gifts, entertainment, personal spending. Now, personal spending can be, let's say, for example, if you've got a partner, and you can call this partner A spending, right? And then I'm not sure how familiar the rest of you are with the theory of spenders and savers. And I think often we'll see that most couples, there's one spender and then there's one saver, right? And so yes, you could have a special spending account for the spendy partner, and then you can even set limits on that account. You can put a budget on that account, and you can tell them, look, you've already spent your limit for this month. You can't spend anymore.
Lol. Everyone does do that.
Yeah. And I've helped some clients in setting up PocketSmith before, and I think one recurring theme is there's always a spendy partner, or there's always one partner who spends more than the other. And so yeah, if you can actually create a special account for the spendy partner and just tell them like, okay, cool, this is your budget for spending this month, and then you keep track of it, and once they hit that limit, you go like, all right, no more spending. All right, but I mean, do it in a nice and communicative way, and without it sounding like you're you're on their back all the time. Yeah. And of course, there are heaps of other expenses that you can set up that we haven't covered. Things like utilities, things like your clothes, for example, things like any other household expenses, buying furniture, etc., etc. And as you create these transactions, you can actually create new categories, right? Mm-hmm. The next thing that we want to have is to have a savings category. Okay, so a savings category is another category that we can set up. It's sort of like an expense as well, but it's not really an expense because you don't want it showing up on your income and expense report that we'll look at later, and looking as your spending on savings, because you're not really spending on savings. You're merely putting money away for future use. And so if you've got savings set up, then what you want to do is that you want to set it up like over here. You want to set it up as a transfer account. Okay, so you can, under category options, you can call it a transfer category. So a transfer category, by default, the category will be excluded from reports. Okay, which means that you can keep putting as much money as you want into savings, and it's not going to look like you're losing money, because you're not actually losing money. You're just putting money into savings, right? And I highly, highly recommend that you don't link up your savings accounts to your PocketSmith. I mean, sorry, let me rephrase that. You can link up your savings account. Your short-term savings accounts are fine, but any long-term savings accounts like term deposits or investments in peer-to-peer lending platforms, investments in stocks and shares, investments in, crypto, you don't want to be keeping track of that on PocketSmith. You want to be keeping track of that separately from PocketSmith. PocketSmith is there mainly to keep track of your household spending. Okay, so anything that you're putting to savings goes into this savings category. All right, it's a very, very important category to set up. So now once you've got all your categories set up, what happens is that you will pop into your transactions, and you can do this once a week. You can do it once a month. It's up to you how frequently you want to do it. Personally, I do it once a month. And then you can check out the transactions that are awaiting confirmation. And so PocketSmith is reasonably smart. They can take a look at where you've spent your money. Say, for example, we spent some money at My to 10, right? And it goes like, oh, My to 10, that's on our home improvement list, all right? And so it'll match it to home improvement because it's one of the default categories. I could go like, yep, okay, that looks fine to me. I could press okay. I could go like, no, I don't use home improvement. I use household expenses, right? And bearing in mind, you can also create category rules based on these transactions. So you can even create a category rule, and we could say that transactions containing these merchant keywords, and I could delete all this. So now we can tell PocketSmith that anything that contains My to 10 to automatically put it towards household expenses. And when we save it, it saves the transaction, and then the transaction is captured and it is included in your report as well. Right, credit interest paid. This is interest getting paid from the bank. Obviously, it's interest income. Right, withholding tax, because we all pay tax on our interest income. Right, and these are transfers between bank accounts. So if you're transferring between one bank account to another, they will show up as transfer categories. Okay, as the category being transferred. Right, and we'll just click OK on that. And really, that's all you're doing. Once your categories are set up, it's just a matter of going through line by line and making sure that it's categorized to the right spots. if I click on the transactions tab alone, it brings me to all the transactions that have been coded. Now, quite a few of these have been automated because I've been using PocketSmith for the past 8 years and I've got quite a lot of rules set up. So PocketSmith kind of knows that, say, for example, if I'm spending on our power, that is utilities and bills. All right, our power is our power service provider. If you're based in the Waikato, definitely check them out. They are one of the cheapest, if not the cheapest, power service provider in the Waikato. So yeah, definitely that's another tip for you, for those of you based in the Waikato. Say for example, I'm going to Pack and Save. I've spent in Pack and Save heaps of times, and so PocketSmith knows to put it to its groceries, right? I've spent money at BP, right? And BP and PocketSmith knows that BP is a fuel station and puts it to gasoline and fuel, right? So for the most part, PocketSmith will categorize things automatically for you. 80% of the time they get it right, 20% of the time they get it wrong. So you still do want to review some of those lines. Like for example, a lot of stuff that I spend on restaurants and dining, PocketSmith likes to put it to lifestyle for whatever reason. And so I need to trade it out of them, I guess. And that just happened in the latest update. Right. But the point I'm trying to make is that once you set up the categories, it's really, really simple to categorize those bank feed transactions as they come through. So you don't have to worry anymore about looking at your bank account at the end of each month and going like, oh, what did I spend this all on? Because it's all going to come out in your PocketSmith and you're going to be able to capture every single thing. And this is super, super useful as well when you look at your accounts and go like, oh crap, why do I have so little money? Well, then you can actually check out what you've been spending it on. But I'll be honest though, ever since I started using PocketSmith, I've never had a situation where I didn't know what's happening to my money. And I got to tell you, it's a powerful feeling. It's a powerful feeling to know exactly what's happening with your money and knowing exactly where it's going. And I think before I used accounting software, I always felt like, oh my God, I'm a bit short this month. Where did all the money go? Right? But now with accounting software, I exactly know where that money is going, and it's a really awesome feeling. And so I've been talking a lot about about expenses. Now the same thing also applies to income as well. So say for example, if I draw money out of my business, right? So greens are basically incomes, and anything that's black brackets are outflows or expenses. Okay, and so yep, and that categorizes as SH business drawings and categorizes that automatically as an income because I've already taught PocketSmith to recognize it as income. Similar with any amounts that I get paid from, that's my wife's wages, right? And similar with any amounts that I get paid from the university, and that's how much the university's been paying me for the part-time work that I do there. And so again, you can teach PocketSmith to recognize these transactions and it can automatically do it for you. Right. So that's talking about the data input side of things. That's a data entry side of things, setting up the correct categories, making sure that you're teaching PocketSmith to categorize them correctly for you, right? Now let's take a look at the next section. All right, and the next section is budgeting. Now, no one likes budgeting. Nobody likes budgeting, right? But budgeting is an important tool, and I'm going to show you how to set up some simple, easy, pain-free budgets. Okay, I'm not a big fan of budgeting for every single little category, right down to how much money you're spending on buying snacks and junk food and stuff like that. I'm more of a fan of looking at the big expenses and managing the big expenses, right? But before we start looking at the expenses, we want to estimate your income. All right, so you want to estimate your income. If you're a PAYE employee, you've got a rough idea of how much you're going to make each month. It's usually quite consistent, unless you're working on a contractual basis. You're getting paid on your hours vary from month to month. But for the vast majority of PAYE employees, you're going to know how much you're going to get at the end of each month exactly. All right, and if you're a business owner, you definitely want to use a pay yourself method. And just a quick refresher for those of you who have seen the pay yourself method, you want to have the right balances. You want to have enough money in your daily spending account to cover your monthly baseline, You want to have enough balance in your GST account to pay GST, and you want to have enough balance in the tax account to pay the year's taxes. And then you pay yourself the lower of your market rate or whatever's left in your daily spending account. All right. So for those of you who have seen those videos, have read that article, you know exactly what I'm talking about. And for those of you who haven't, I still highly recommend that you go and watch them. Okay. So now once you've worked out your income, you can head over back to PocketSmith and you can then click on budget. And you can click on your, you want to expand all categories. Yep. And then you'll want to take a look at the budgets that you've set up. So if you're doing this for the first time, everything will look blank. All right. And then you'll want to go down to your income. And it's all the way at the bottom. Okay. And you'll want to click on the budget category. You want to be able to edit the budget, and then you can put how much you expect to make from this income source, okay? And how often it repeats. You can repeat this every month. It can be every week, day, etc., etc. I would recommend doing it on a monthly basis, but if you like budgeting on a weekly basis, you know, more power to you, right? And you can set this account forecast based on the account that you're getting paid into, which is daily expenses. Okay. You don't have to worry about rolling it over because it's income. Only expenses you can roll over, but we'll talk more about rollover later. Right. And then just update or save and confirm changes. Yep. This and all budget events in the series. Easy. Okay. Right. And then that shows, and that sets your budgeted estimation for how much you are going to be making from that particular income source for this month. And you can do the same as well for your spouse's wages as well. So if you've got a good idea of how much your spouse makes each month, then you can click there, edit the budget, and you can set how much you think they're going to be making each month, right? Remember, this is a rough amount, and especially as a business owner, I mean, some months you're going to take out more, some months you're going to take out less. I think personally for my business, April and May have been really high expense months. We've been investing a lot in our new website and some new marketing strategies and some new marketing campaigns. So we're kind of running in the red right now, but we're hoping to recoup all those costs later in the year. So in the meantime, I've reduced my drawings from the business and I've been living off of instant noodles and veggies.
Nothing wrong with that, Sam. I'm a big fan of instant noodles, actually.
Hey, I mean, you know, you gotta, if you're not suffering for your business, are you really running a business, right?
Yeah, that's right. That's right. Oh my gosh, I've got a question for you. You know, sometimes when you build a budget, you're kind of looking at, and you've been paying yourself possibly, maybe you get paid fortnightly, right? And
Yep.
so you know that you spend a certain amount on something every 3 months, say, like you've got some kind of thing that you spend maybe $500 on, but you only spend that every 3 months and it comes out in a chunk. So then how do you budget that into your weekly, you know, if you're setting yourself weekly budgets or you're setting, you know, because the way that you're being paid, how do you actually put certain amounts into your account in order to allow for that big spend?
Yeah, good question, Anamari. So that's where rollover budgets come into play. And we'll talk more about rollover budgets when we move into expenses, right?
Okay, cool.
All right, so that's income. Income's really easy to budget for. I think everyone knows with really absolute certainty how much you're going to be making each month, right? Even as a business owner, you have a pretty good idea of how much you can expect to make each month, right? And you can set yourself an average number. And obviously as a business owner, you know, sometimes you can go above that amount, sometimes you can go below that amount, depending on how much cash you have inside your business. Right. So that's setting up budget for income. Now next we need to estimate your expenses. Now, the first thing that you want to do is to focus on the big four. Okay, and your big four are going to be groceries, motor vehicle expenses, and motor vehicle expenses can be broken down into fuel and repairs, right? And insurance. Okay, eating out okay, and mortgage and rent. Now, budgeting for mortgage and rent is very, very easy because you're always going to be paying, if you're paying rent, you absolutely know what you're going to be paying in rent every year, unless of course you just recently had a rent increase, then you just basically adjust your budget to accommodate that rent. And with the mortgage as well, you pretty much know how much you're going to be putting towards the mortgage, right? Now, because these are just personal accounts, you don't have to worry about calculating the interest portion of the mortgage versus the principal portion, because it's all going to be considered as a negative cash outflow from your income anyway, from the money that you're putting in. So you can treat it all as an expense. All right. Of course, from an accounting point of view, you can only claim the interest expense for your taxes. But again, this is personal home accounting stuff. So let's not worry about the difference between the principal and the interest portion. We'll treat it all as one singular expense for personal purposes, right? So again, we can go back to that budgeting screen and can go over there, and then we can look at our, so the first thing I want to look at is my groceries. All right, so in our household, we've budgeted about $700 a month, okay, for our groceries. Now, PocketSmith is quite smart. It'll even show you what your average spend per month is. So we are a household of 4. I've got 2 kids, and one of them's 10, and one of them's a really, really hungry, constantly hungry 14-year-old. And so yeah, we spend quite a bit on groceries, and I cook heaps at home as well. And restaurant and dining, we set about $500 a month. Okay, so these are the 2 out of the big 4. And obviously we've got rent and mortgage. We've used to budget it at $2,000 a month, but our rents recently increased, and I've probably got to update that budget. So we can click in there, you can edit that budget. Okay, so probably $2,000 a month is a bit too little. Now that we've had the rent increase, we probably want to go to $3,000 a month. And man, I can't wait to stop paying rent. And yeah, because good news as well, we've actually got a place lined up. We're going to be homeowners soon, and we've got financing sorted out. So it'd be good to stop making my landlord richer and start enhancing our personal wealth. Yeah. But of course, if you have a mortgage, then you want to be creating a mortgage category, all right? And you want to be budgeting how much exactly those mortgage repayments are each month, okay? And finally, we've got motor vehicle expenses. Now, motor vehicle expenses can be broken down into fuel, repairs, and also insurance, all right? Insurance is quite easy to estimate. Now, let me look for insurance. Here, there we go. Right, so insurance really easy to estimate. You kind of know how much you're paying for insurance each month. Of course, if you're paying on a yearly basis, what you can do is you can actually break down that yearly amount, and then you can separate it into monthly amounts, and then create a rollover option. And you can roll over when underspent. When underspent. This means that, say for example, you're setting aside $100 for insurance each month, right? And you've got a big lump sum. You're paying your car insurance on a yearly basis. You've got a big lump sum of $1,000 once a year. Sorry, well, we'll say $1,200 once a year, all right? That's easier to divide. Then we'll put aside $100 each month into this budget. And if you don't spend $100 for that particular month, it rolls over, all right? And it increases to $200 the next month, and $300 the next month, and then $400 and then $500, right? Until you get to the point where you are ready to pay it, and then you basically pay out, and then you meet that budget. So definitely click roll over when overspent or underspent. Don't just do it for underspent or just overspent alone, because the timing really differs, right? And this means that this is what you set up for those one-off kind of payments, and you slowly chip away towards it, right? If your insurance is a mix of both monthly and one-offs, I would highly recommend setting up 2 different categories, one for, say, auto insurance, one for contents insurance, one for life insurance, and so on and so forth. So you're keeping track of the different types of insurance that you have and the different payment arrangements that you have on each type of insurance. Gasoline and fuel should be a monthly spend because this is constant. We are constantly spending on gasoline and fuel. And we don't spend an awful lot of money on gasoline and fuel because I work from home and we live quite close to the hospital where my wife works. So we put about $250 aside a month for this one. And depending on how much you use gasoline and fuel, you may want to adjust that. Now, bearing in mind that this is for personal purposes, if you are running a business car or company car, that's going to be covered by the business anyway. So you may, and if you are still using that for personal purposes, like, I mean, because let's face it, you probably are, you might actually find that your personal spend on gasoline and fuel is probably a bit lower than what it actually should be. So yeah, leave that to you to work it out. And obviously we've got car repairs. Now, car repairs is also another thing that we want to chip away at. And we can start budgeting for this category. And we can say that, all right, we want to put aside $100 each month for the car expense. We want to budget it as an expense. Yep. And yeah, rollover activated. So yep, so we want to allow this to roll over. Yep. And we want to do it for both under earned and over earned amounts. Okay. And click save. Right. Okay, and then we can X out of here and we can go back to the, oh, hang on, whoops. All right, yep. So we want to save this. And so now that's set up and we want to just double check it and make sure that rollover is set up. Okay, and so rollover is what we want to do for those one-off expenses that we want to chip away at each month. All right, so rollover both, yep. Starting Jan 19, 2022 and continuing indefinitely, right? So this means that every month, if I don't spend it, it's going to just add up and build up, right? And that'll tell me that, okay, cool, you've actually still got this much left to spend for car repairs. Okay, and once you've set up the big 4 budgets, you can go down the list and start looking at other budgets that you want to set aside for. Now, again, if you've got that spendy partner, you may want to create a special spending category for them. And it can go like, partner A's spending account. They can set them, okay, you only have $600 to spend, and that's, up to you to spend out of there, all right? And then as they spend, you're keeping track of where they are sitting on the budget, okay? I wouldn't bother with budgeting every single budget, okay? And I would be very, very careful about using the auto budget tool. Don't use the auto budget tool because the auto budget tool will basically budget for every single thing and it will average everything out over each month. And that can really throw you off because it's based on your previous spending and some of your previous spending may not be the same as your future spending. So it's always better to actually sit down and look at each budget category and work out how much you want to spend on each budget. Because if you notice that I haven't budgeted for every single thing, I've mainly only budgeted for the big expenses and a few other expenses that I feel are worth keeping track of, all right? And budgeting for every single detail bit of category is going to be extremely stressful, and you can't, your brain can only keep track of so many numbers. And speaking of keeping track, once you've set up the budgets, if you can check out your dashboard on PocketSmith, you can actually take a look at your active budgets and you can see what budgets you have overspent on, what budgets you have over-earned on, what budgets you have still left to go, right? So say, for example, I can take a look at, okay, so we've overspent for insurance, but that's probably my bad because we just recently paid, I think, car insurance, and that's why that's a bit higher than normal, right? I budget for my children's chores. Look at that. I've paid my kids more than what they should be getting. But that's more of a timing thing, right? And we've got the drawings. I'm expected to take another tooth 6 out from the business still. And in terms of gasoline and fuel, we can still spend a bit more. We can spend a bit more on groceries. And the reason why this is so low is because my wife went to Australia for 2 weeks and the kids went as well. I couldn't go because of visa issues. But it means that we save a lot of groceries. And that's the rest of the budget, so we can keep track of here. And again, if you do have a spendy partner, that spendy partner's budget is also going to pop up here, and so you can keep track how much they're spending. Right. And so that's budgeting. And finally, we come to reporting. Okay, and reporting is really great. I love reporting, but then again, I am a huge finance nerd. I don't know about you, but I just really love looking at this beautiful pie chart of spending. So the first thing I want to share with you is the dashboard pie chart. So the dashboard pie chart looks like this on PocketSmith, right? Oopsies, I did not share it. Oh, sorry, I am sharing it.
Oh, but should it look like a pie chart or like a
sorry.
graph?
Is everyone looking at a PocketSmith right now?
Oh, now we are. Now we're looking
Yeah,
at
there we are. Sorry, I must have
okay.
I must have like I thought I was showing the slides, but it turns out I wasn't showing the slides. Right. Yeah, okay. So this is your earnings pie chart. Okay, and this is our earnings pie chart for last month, essentially. Right. So we spent quite a bit of money last month mainly because of traveling. And yeah, so long story, we used the business money to pay for the travel funds and I had to reimburse the business, obviously, from that. But let's look at a more normalish month of, say, custom range. A more typical month for us, let's say, for example, in March 2022. Right. So that's what a more typical month looks like for us. So in the inner circle here, that shows our income as a family, right? The inner circle. And you can mouse over and see how much that is. And then the bigger colored portions show you your expenses. And so as you can see, rent, mortgage obviously takes up a huge chunk of our expenses. That's almost like 40 to 30% there. And you can take a look at what else that you've been spending on. And there are a lot of little categories here, which I really don't care about. What I care about is how much do I spend on rent? How much did I spend on groceries? How much did I spend on restaurants, right? And how much did I spend on gas? Okay. Now we've also had some other big expenses, like say, for example, health. I'm currently undergoing physio for my broken ankle that I'm out of a cast for. So spending quite a bit of money on that. And also on some subscriptions to, Yep. So yeah, my wife was paying for her professional nursing certificates and also to get some identity documents from the ministry, right? So that's why we had a particularly big spend for that for this particular month. But these are things that are unexpected and you don't necessarily have to budget for, right? And so the dashboard pie chart is really, really great. And this is what I do every month with my wife, is that at the end of each month, we'll sit down and we'll take a look at our expenses and we'll go like, okay, ooh, we spend too much in groceries, or oh, we spend a lot of that, we spend too much on this, right? And so when months like last month come around, because my wife traveled to Australia and all that, we actually spent more money than what we made last month. And so we can go like, yep, I know exactly why we made less money, because again, I took less money out from the business. I took out only about $2,400 from the business instead of my usual $5,000. And we spent a lot on traveling as well. So we know exactly where that money is going, right? And so we know that, yeah, that's probably part of the reason why our bank accounts look a little bit sad this particular month, right? Because we've already spent that money. We know exactly where that money is going, right? And I can look at this and I can go like, yeah, you know what? That's fine. That's a one-off. We're unlikely to go traveling again this month, right, in June. And so we expect that this June will probably be in the green again. And being in the green is where you want to be, right? Because, and let's just go back to the slides. Where are the slides? There we go. Yeah. Okay. Because next we want to look at our income and expense report. Okay, now the income and expense report gives you everything in a snapshot. It's easy to produce, and this is something you can give to your mortgage broker. Now, I'm not sure if you guys are familiar with the mortgage application process, but typically one thing that the mortgage broker will always ask of you is that they will give you a list, a spreadsheet template, and they'll go like, please fill in your average income and expenses in this template. And yeah, it's a pain in the ass really to fill it out line by line. You've got to sit there and got to think, oh, how much did I spend on rent? How much did I spend on power? How much did I spend on da 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 da? So what we did when we applied for our mortgage, and we've got conditional approval, by the way, using this, all right, is that I just chose a date range and like, yep, last financial year, awesome. Okay, hit export, all right. I hit export and printed it out as a PDF. Boom. That's it. Done. Yeah. And I gave this to my mortgage broker and he was like, sweet, we can work with that. Your mortgage broker may even be quite onto it as well. And so, yeah, we just basically gave this. Hang on, let me just share that with you. Yep. So we just basically gave this to our mortgage broker and it's like, sweet, that's all the income and expense information they need. And then it's super transparent. It's absolutely based on your bank feeds. They're going to ask for your bank statements anyway. And it just gives the confidence to your financiers that, yep, you've actually got your shit together, part of my language, that you've actually got your stuff together. And it will actually help towards you getting that approval for financing. Because you've actually put in the work to make sure that everything's categorized correctly. Yeah. So really, really powerful tool right here. Now, if your mortgage broker's really onto it, you can even go to access control. You can even invite someone to your PocketSmith, right? So if you've got a mortgage broker who is PocketSmith friendly, you can even invite them onto your PocketSmith and you don't even have to print out this report for them because they've got all the information that they need from your PocketSmith. And you just go like, all right, cool. Here's my access. I'll give you access to the PocketSmith and you can go ahead and check it out yourself. Now, I'm not going to say that all mortgage brokers do this, but some of them do. And it's probably worth asking them if they can do that because they'll save you heaps of time in applying for finance. Now, the last thing we want to talk about is how much are you saving? Now, the main point of this exercise of keeping track of all our income and expenses is that we want to make sure that we are making, number one, we're making more than what we're spending. And number two, that we're able to save away that amount that we're not spending, you see? So one thing that me and my wife always try to aim for, we try to aim for at least 50% savings, okay? So this is our total inflows for last year, and this is our total outflows for last year. So it's not exactly 50%, but it's pretty dang close. It's pretty dang close. And it's 122,316.41 minus 67,282.97, and that's about 55K. Oops. Yeah, that's about 55. Right, and so that is 55 divided by 122. That's about 45%, almost a 45% savings rate. And so that's the money that we are putting into our short-term investments to build up our cash for the first home deposit. And this is part of the reason why we were able to save up a 20% deposit on our first home as well, which is really, I think, given how difficult it is to obtain financing these days, that's really where you want to be. And I think, and having this home accounting tool has really, really helped us in driving hard towards those savings goals, because we know exactly where money is going. We know exactly how money is being spent. We know how to tweak our spending. We know how to stretch that dollar as far as we can so that we hit that 50% savings goal. Now, of course, our situation is unique, and I'll admit we are a middle income family. We're probably making a little bit more than median income. But I think regardless of your financial situation, you will obtain a lot of control over your finances with using the really, really simple method of just keeping track of your finances. Now, yeah, so keep track of your savings and then put it towards investments that will work towards your financial goals. If you're looking to save up for retirement, then put them in some long-term exchange traded funds. If you're looking to save up for your first home, put them in short-term funds, term deposits, peer-to-peer lending platforms, or whatever else works for you. All right. And if you want to jump off the deep end and invest in cryptos and NFTs and what have yous and what have not, sure, man. But yeah, don't put all your savings in that. Don't do that. Don't be don't be silly. Yeah.
Yeah,
And
we've
yeah,
seen what's happened. We've seen what's happened lately with that. Hey.
yeah, I think the whole crypto is not affected by the stock market downturn. It's all a bunch of bull because
Yeah,
at the end of the day,
there's a
they're
lot
all
happening.
interrelated anyway.
There's a lot
Mm.
happening, Sam, out there in the financial world, you know. I'm hoping to get some sessions actually booked this year on crypto and stuff like that. I think, you know, it's important to understand
Yeah,
um,
definitely. Yeah.
fintech and how it works. And because a lot of businesses, in
Mm.
addition to the fact that, you know, NFTs, and if you don't know what that acronym is, it means non-fungible token. And so a non-fungible token, essentially it exists, but it doesn't exist in sense. Like it's a digital
Yeah.
asset.
I mean,
And
what we like to call NFTs in the financial circles is that they're not effing true.
yeah, oh, okay, okay. Because there's non-fungible tokens. So they could be anything. It could be like when a lot of gamers, you know, they'll buy outfits for their characters, and those are NFTs. So they're not actual things that you can touch, but they do have a footprint online. So usually they'll be connected with something called blockchain, which is basically like it's almost like a barcode, I guess,
It's
would
a
be
digital
kind of a
ledger.
way, yeah, that can
Yeah.
be traced over time as
Mhm.
people sell it and buy it. And
Mhm.
so as we move more and more into these kind of things, like artists can use them. They're using a lot of NFTs now for signing documents and being able to track, you know, document signing. So they're coming into play in lots of different ways, not just with money and crypto. You know, they're being used in a lot of different ways. So I think it'd be cool to have a look at that, because I know some artists that are selling, you know, actual physical prints of their work, but they're also selling NFTs of their work. And so there's like, you know, there's this whole other element. It's that whole meta
Yeah.
universe kind of world, Sam. And I know
I've
you like to be in the tangible world.
yeah, I've got a lot of
Yeah.
strong opinions about NFT, but I think we can
Yeah,
save them for a different session, a different time. And
absolutely. And
but I
I
think
think that we don't
the
have to be
bottom
on
line about
board.
NFTs, the bottom line about NFTs is that they are trying to put a label on something which has been already invented 20 years ago. And they're trying to act like it's new technology. Yeah. But
Yeah.
anyway, we can talk more about that in a different session.
Maybe it's a podcast. Maybe that's just a podcast in itself. Maybe we get a panel. We get somebody who's like NFT, you know, for and NFT against, you know, that'd be kind of a cool, interesting conversation. Yeah.
Okay, yeah, maybe. We'll see.
That'd be
We'll
kind
see.
of
Yeah.
cool,
Yeah.
right?
Yeah, but I'd be keen
Um,
to run a session on tax on crypto assets. I think, I mean, as much as I don't really believe in crypto assets, I am more than happy to help clients who do sort out their taxes around it. And I think we're one of the few firms in Aotearoa that actually knows what's going on in the crypto tax space.
yeah, cool.
Yeah.
I actually have a question here for you, Sam. If we could,
Yep.
I know it looks like I'm not looking at you. It's because I'm looking at Facebook. It says,
Yep.
"Hi, Sam. Is it better to do your personal accounting alone or combine it with your partner?"
Combine with your partner, 100%. Yeah.
Okay.
If you are in a stable, committed relationship, you know,
Mhm.
and you know you're going to be spending the rest of your life with that person, then you ideally want to combine your accounts together. If you are, if you just started dating, or you're not quite sure whether you want to be spending the rest of your life with this person, then by all means, don't combine your accounts together. Don't intrude on your personal finances.
Mm.
So it really depends on what stage you are in your relationship. But if you are in a committed relationship, definitely combining your accounts is the way to go.
Okay. I have my own opinions on that, but I'm not an accountant. So, but
Yeah.
yeah, I guess that's probably tax wise. Do you reckon that's easier tax wise as well if everything's kind of combined, or?
Well, I mean, you don't need to use home accounting for tax purposes, but I think for more long-term planning purposes, it makes sense to have those finances combined.
Yeah, I've
Because
heard that somewhere.
ultimately, I mean,
Yeah,
because ultimately, if you're looking at buying a house,
yeah.
it's going to be easier for you to buy a house together. Financiers will look at you more favorably if you're combining your accounts together with your spouse or your partner. rather than making the application based on your income alone. You're not going to be able to borrow as much. You might not be able to get the house that you're going to live in with that other person anyway.
Good point. That's a
Yeah.
really good point. Oh, Sam, always such great insight. Let me just duck back. I know that Dean had made the comment. You're welcome, Ryan. I know that Dean had made the comment saying that, but don't NFTs protect the artist? And yeah, there is an element to that. It's a whole different ball game, Dean. I'm happy to chat with you about that. It does allow artists to, if you had a music, and people shared it with their friend, you would be able to see it being shared. So the kickbacks will go back to the artist. So yeah, it does do that, Dean. That's absolutely. So that's why there are some benefits.
I think
to
we'll save the NFT discussions
I think
for a different day. Yeah.
It's a whole thing. I find it so interesting, the disruptive technologies. So, like that, it's definitely something that I'd like to get. So we're going to put some more stuff in there. Just as a reminder to folks, our schedule is changing here at Digital Boost. We are evolving just like everything evolves in tech. And we realize that having the ability to actually chat with our providers and suppliers and really work on something together, a project, and come out with an outcome that's tangible is really useful in the learning process. So we are instituting workshops starting in like a week or so. We'll have our first workshop. They're going to be 2 hours long, and they won't be publicized on our social media channels. You'll have to actually register them for people's privacy. And so you'll be able to come into like a Zoom meeting and actually be able to turn your camera on or keep it off if you like. You'll be able to chat. We'll work through some kind of skill set. And at the end, you'll have like a tangible kind of result, because we know that a lot of times we listen and we look and listen and we learn, but then we go to apply or we just don't apply because we get so busy. And so we want to help bridge that gap. So that's coming up. So the schedule is a little bit, let's say it's unique at the moment with how many sessions we're running per week and what kinds of sessions we're running. And we appreciate your patience as we move through to this new style, which we think will be really beneficial to everybody involved. Because we've got such great people like you, Sam, that are involved in Digital Boost. And I know that like while we were doing this session, I was in my PocketSmith having a little bit of a look going, oh, shoot, I shouldn't have that account attached, like blah, blah, blah. So those kind of things can be really useful in a workshop setting. So have a look on the schedule coming up in the next few weeks. We'll be talking more about that. So Sam, thank you so much for coming.
Thank you for having me.
Hey, it's always a pleasure. I get such joy out of having you in my life. So thank you.
Oh, thank you, Anamari. Likewise.
I hope everyone has a wonderful day. No matter where you are in Aotearoa, stay safe. I hope you're well, and we'll see you again tomorrow. So ka kite, everyone.
Ka kite.